And there's new reporting on a phone call between the president and the founder of Amazon, Jeff Bezos. Sources telling CNN that the president at one point wasn't happy earlier today about a report he saw regarding the online retail giant.
President about Amazon's announcement. This is a hostile and political act by Amazon.
On Amazon, in this report that Amazon might start listing the additional cost on specific items put in place by the tariffs.
President Trump's tariffs. The press secretary deemed that a, quote, hostile and political act by Amazon. We know, of course, that Jeff Bezos, the owner of Amazon, also owns the Washington Post and other interests, has really cozied up to Trump in these first 100 days.
One policy, $13 billion. Overnight, Amazon just ghosted American warehouses. In this video, we'll unpack why Amazon's sudden U.S. pullout has nothing to do with sales, and everything to do with geopolitics, tariffs, and a supply chain reckoning no one saw coming. Imagine your favorite product vanishing overnight. Gone from shelves, gone from Prime. What would you miss most? Drop it in the comments. Your answer might be tomorrow's news. You wake up and half your Amazon deliveries are suddenly delayed or missing. What just happened? In a swift and silent move, Amazon has begun offloading major U.S. distribution centers. These closures weren't forecasted, nor were they phased. They were immediate. The reason? A sharp, tariff-fueled pivot sparked by Trump's renewed trade war strategy targeting foreign manufactured goods. And Amazon, reliant on those goods, isn't waiting to get burned. They're already out the door. Amazon blinked first, and the market noticed. For consumers, this means rising delays and plummeting reliability. For competitors, it's either a wake-up call or an opening. Takeaway: monitor your fulfillment pipeline. If Amazon's shifting, others may follow fast. Imagine a 60% tax slapped on nearly everything you buy online. That's the scale of Trump's 2025 tariff proposal. Sweeping levies on electronics, textiles, consumer gadgets, core categories for Amazon's product mix. These aren't minor fees. They're business model killers. Every dollar taxed is a dollar that must be passed to you, or eaten by sellers. Supply chain inflation and seller migration. That's a double gut punch. Amazon's logistics model, built on thin margins and scale, doesn't survive a 60% import penalty. It pivots, fast and globally. Takeaway: watch tariff trends like tech trends. They're just as disruptive. One headline, one tweet, and $13 billion vanished from Amazon's market value. Following early reports of Amazon's retreat, Wall Street reacted with panic. A 7% stock drop in a single day wiped out billions in shareholder value without a single earnings report. Why? Because investors hate uncertainty, and nothing screams unknowns like a disrupted global logistics network. Fear of policy change triggers financial earthquakes. Hedge funds began reallocating into more tariff-resilient sectors: defense, domestic manufacturing, energy. Amazon became the first domino. Takeaway: diversify your portfolio before policy forces your hand.
Amazon is raising the price for annual Prime memberships. Starting May 19th, the cost will jump from $99 a year to $119 for new members and $59 for students.
Picture a giant Jenga tower. Amazon just yanked out the middle block. By pulling back on U.S. logistics, Amazon isn't just affecting its own operations, it's shaking the entire delivery ecosystem. FedEx, UPS, USPS, and even independent trucking fleets relied on Amazon's volume to stay lean and profitable. Remove that volume, and everyone downstream feels the shock. One corporate pivot can collapse entire regions. Small towns with Amazon fulfillment centers may see sudden layoffs, abandoned buildings, and local economic distress. Takeaway: economic resilience starts with diversification in jobs, carriers, and cities. Behind every Amazon box is a small business betting on Prime. Over 60% of Amazon's marketplace revenue comes from third-party sellers, many of them family-run or solo entrepreneurs. They depend on Amazon's U.S. fulfillment network to promise 2-day delivery. When that network crumbles, so does trust, revenue, and stability. Sellers are already reporting mass cancellations, supply chain halts, and lost income. Fulfillment gone equals business gone. That's the hard math. One Arizona candle brand lost 90% of orders in 2 days. That's not a dip, that's devastation. Takeaway: never tie your business survival to one distribution partner. What if Amazon's solution to tariffs is to leave the country entirely? That's what's unfolding. Amazon is accelerating offshore fulfillment, especially in Mexico, Canada, and Southeast Asia, where labor is cheap and trade barriers are fewer. It's not just about cost-cutting anymore. It's about avoiding a politically weaponized border. Profit protection becomes geographic relocation, fast and far. But there's a cost: longer shipping timelines, weaker quality control, and a fragile international supply web that can break with a border closure. Takeaway: if your business relies on fast fulfillment, prepare for international bottlenecks. 2 years ago, Made in America was gospel. Now it's retreating quietly. During the pandemic, reshoring and onshoring were heralded as the future. But Amazon's exit is a signal. The economics of local manufacturing and logistics still don't add up. U.S. infrastructure, energy, and labor costs remain too high to compete globally, especially when tariffs punish global sourcing but offer no domestic substitutes. Onshoring without support becomes a slogan, not a solution. Without massive investment in infrastructure and workforce, America can't match offshore efficiency. Takeaway: don't trust political slogans. Trust the movement of capital. Tariffs sound patriotic, but are they practical? Trump's team says the goal is to bring jobs home. In reality, many U.S. companies don't have domestic alternatives ready. So instead of reshoring, they reroute, shifting logistics to countries outside the tariff wall. The result? More complexity, not more employment. Tariffs create heat, but not always light. Without parallel investment in manufacturing and infrastructure, tariffs just spark evasive behavior. Takeaway: trade wars need trade plans, or companies will walk away. If this story has your head spinning and your shopping cart worried, now's the time to subscribe. We've got even bigger revelations ahead, and you don't want to miss what Amazon's global pivot means for your wallet. Amazon isn't downsizing, it's redirecting, and fast. In recent months, the company has been investing heavily in India, Brazil, and parts of Africa. These regions are tariff-safe, workforce-rich, and increasingly e-commerce hungry. The US may be Amazon's home turf, but it's no longer its highest priority. From Seattle to São Paulo, that's the new game. Wherever policy creates friction, Amazon finds flow. This isn't retreat, it's rerouting at scale. Takeaway: want to see the future? Watch where Amazon builds next. Tariffs aren't just economic tools, they're political fireworks. Heading into the 2024 election, Trump's tariff platform plays well with key voter blocs: Rust Belt workers, domestic manufacturers, and economic nationalists. But the unintended side effect? Giant companies abandoning U.S. soil to protect profits. Populist optics, corporate exodus, that's the paradox. And it's not just Amazon. Policy pressure without economic realism creates instability across sectors. Takeaway: when politics drives economics, expect volatility, not productivity. What if Amazon's exit is just the beginning? Big tech has been diversifying away from the US quietly for years. Apple's supply chain increasingly leans on India and Vietnam. Google is building data centers in Latin America. Tesla's Shanghai Gigafactory isn't just a backup, it's a primary. These companies aren't waiting for tariff relief, they're hedging now. Corporate silence often signals strategic flight. Amazon's retreat isn't a fluke, it's part of a larger tech decoupling. Takeaway: when giants tiptoe out, smaller players need to run faster. The next time you order toothpaste, it might take a week. With Amazon scaling back US logistics, customers face longer shipping times, limited availability, and price hikes on essentials. That Prime badge? It's already losing meaning. Sellers will either raise prices or drop out entirely, and both options hurt the end user. service degradation and price inflation, an ugly combo. This isn't just a corporate tug of war, it's your daily routine being rewritten. Takeaway: adjust expectations. Fast, cheap, and reliable may not coexist anymore. Abandoned warehouses are popping up on Zillow listings. Yes, really. Cities across Ohio, Indiana, and Pennsylvania are seeing Amazon facilities go dark, and fast. These hubs weren't just distribution centers, they were local economies. Real estate, gas stations, truck depots, diners, all tied to the hum of Amazon logistics. When one node falls, the network around it collapses. It's déjà vu for towns once reliant on factories. Now they're losing fulfillment. Takeaway: don't build towns around titans unless they're planning to stay. Not every giant is bleeding. Walmart and Target, two companies with deeper domestic supply chains, may gain ground in the short term. Their tighter U.S. sourcing and legacy infrastructure give them a cushion against tariff shocks. But don't assume immunity. Tariffs eventually ripple everywhere. Slow bleeds often go unnoticed, until it's too late. Winners today could be next quarter's cautionary tales. Takeaway: temporary advantages are no excuse for complacency or inaction. What if Amazon isn't reacting, but predicting? Sources suggest Amazon's shift wasn't just a policy reaction, but an algorithmic one. Their AI-driven supply chain models flagged tariff risk months ago. Predictive logistics, powered by machine learning, is now a corporate survival tool. These systems model geopolitical disruptions before humans even sense the threat. Machines read policy tea leaves faster than people. When risk forecasts say, "pull out," CEOs don't argue. They relocate. Takeaway: build your strategy like Amazon does. Proactive, not reactive. Can lawmakers stop a corporate exodus already in motion? Some members of Congress are calling for emergency policies to counteract the fallout, including tax relief for domestic fulfillment, tariff waivers for small businesses, or even a moratorium on logistics relocation. Legislation crawls, markets sprint. A 6-month delay in Washington could mean a permanent change in corporate geography. Takeaway: don't wait for Congress to save your margins. Plan without guarantees. This isn't just a story about Amazon, it's about you. Whether you're a shopper, a seller, an investor, or just someone trying to budget smarter, the ripple effects are already reaching you. Expect fewer deals, slower shipping, and volatile inventory. And if you're running a side hustle through Amazon, it's time to explore backup channels. Economic earthquakes don't ask for permission. Stability is out. Agility is in. Takeaway: diversify everything. Shopping habits, income streams, even browser tabs. Amazon's exit is just the first tremor in a seismic shift. What we're witnessing isn't merely a reaction to tariffs. It's a fundamental reshaping of how global commerce works. National borders, once softened by tech, are now hardening again. But e-commerce can't thrive inside a fortress. When policy punishes scale, innovation reroutes. Globalization is breaking and rebuilding itself in real time. The future won't look like the past. It will be faster, riskier, and harder to predict. Takeaway: stay informed, because when giants move, the ground shakes for all. So here's the bottom line. Amazon's sudden US exit isn't a blip. It's a warning, a $13 billion correction, a political grenade tossed into the supply chain. And it's just the beginning. As tariffs rise and borders harden, global businesses are rewriting their playbooks, fast. Want to know who's next? Hit subscribe now. Disclaimer: this content is not professional, legal, financial, or investment advice. Always consult a qualified expert before making any business or personal decisions.